Hello, welcome back to this week's market update. Today is Friday, January 19th, 2024, and it was a very interesting week with some mixed data between the consumer and producer. So we'll jump right in. In this shortened week, equities were mixed as hot retail sales data concerned investors that the Fed may not be ready to cut rates in March as originally expected. As of close on Thursday, January 18th, the Nasdaq Composite gained over 0.5% on the week, the S&P 500 just about flat on the week, the Dow Jones down about 0.3% for the week here, and the Barclays Aggregate Bond Index down over 1% this week as yields have risen. Also, as I'm speaking now, the S&P 500 is hovering near its all-time high here on Friday afternoon, so we'll have to wait and see if it actually closes above its all-time high. Heading into this week's economic data, we got retail sales numbers for the month of December coming in much stronger than expected. So here you can see retail sales totaled $709.9 billion, which was a monthly increase of 0.6%, so quite strong there on a monthly basis. And that also represented a 5.6% increase from December 2022. And this was largely driven by increased sales in just the general merchandise categories here, as well as auto. So we've seen auto prices kind of pull back quite a bit or grow at a much slower rate. And maybe this is driving some of the end of year buying here that we see in December. So really strong month of retail sales data, but that also kind of spooked investors that the Fed may not be ready to cut rates. So we'll take a look at that next here. Looking at the probabilities of a rate cut as a result of this really hot retail sales data and obviously a multitude of other market forces here, but it's changed quite a bit over the last week and the expectations for the March Fed meeting here. So 1 week ago, the market was pricing in about an 81% chance of a rate cut by March. Now we're pricing in a 51% chance of a rate cut by March. So quite a big change there, and that comes with, the retail sales data coming in quite hot, as well as some Fed members' comments and sentiment and that sort of thing as well. So really interesting here, and we see this being one of the biggest points of turbulence possibly in the new year if the Fed says one thing and the market is expecting another, that is, causes the potential for a lot of turbulence in the market. So we'll continue to watch and see what the market expects versus what the Fed actually does. Moving along through our week, a data point that we don't always refer to because it is more of a regional index of the manufacturers in just the state of New York. Very kind of niche index here, but big change. And New York is a very significant state within the US economy. It makes up a huge proportion of the country's GDP and whatnot. So definitely want to keep our eye on things like this. But the New York State Empire Index here came in much below expectations this week. So the expectations were around 18.8. Here you can see the expected general business conditions index here. And it actually came in at a negative 43.7. So this was a difference of 62 points here in the index. Quite a big difference in the expectations versus reality of what the Fed Bank of New York actually reported. So it was led by a really weak new orders index, a really weak shipments index, and just really weakness overall within the manufacturing industry of the state of New York. So just want to keep our eye on this, as we look at consumer confidence data, consumer sentiment, those sort of things that are showing signs of positivity, retail sales coming in really strong. Certain indexes like this that report on kind of the producer side of the economy are showing some cracks and some signs of weakness. So we want to keep our eye on that. Shifting gears back to the consumer side of economic data, we got the University of Michigan's Consumer Sentiment Index for the month of January here, and that showed a rise of 13%. So really good there, and that follows another month of December being really positive, so continuing that bullish trend. This marks the highest point since July of 2021. So here you can see kind of the upward trajectory that we've been on, and we'll continue to see if that rises to, these pre-pandemic levels. Not sure if it actually will or not, but it'll be interesting to see. Another thing I wanted to note was these last 2 months of gains marked a 29% increase in consumer sentiment, which was the most substantial increase since 1991 in a 2 month period. And that was right as the US was exiting a recession. So, really interesting there that the consumer sentiment index has been this hot and has been quite positive over the last few months and really just been trending up since 2022, where it fell here when those rate cuts were starting. And, when there was a lot of concerns about the economy, the stock market was down quite a bit. So, really interesting stuff. And I think the main glue to this piece, this picture of the consumers doing well, is that the job market has maintained its strength, right? So, initial claims came in really low this week. Actually, I think it was a 15-month low in initial claims, weekly initial claims. So, really, the glue to the economy is the strong labor market, and that is reflected well in this consumer sentiment data. Finally, on trend with the same thing we've been seeing in existing home sales over recent months, we have seen a monthly decrease as well as an annual decrease in the month of December here. So sales totaled 3.78 million in the month of December. You can see inventory is up a bit from a year ago. The median sales price is at 382,600 there, and that's up 4.4% from a year ago. And then, as I was just saying here, the sales volume is down quite a bit from a year ago and even down on a month-over-month basis. So this overall, we're seeing a more moderate rate of price increases in existing homes as volumes kind of continue to move slower with the higher interest rate environment. So keep an eye on the existing home sales market, the new home sales market for any big changes, but for now, nothing too much going on. Just want to keep an eye on it. So thank you so much for joining this week's market update, and we look forward to seeing you next week. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.